Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, August 9th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, August 10th. Currently, futures are pretty flat. Got the Dow Jones futures up 1 point, S&P 500 futures up 3/4 of 1 point, and NAS futures down 3 points. So literally almost as flat as you can get. So market just relaxing a little bit after pretty strong action last week, and a decent day. Today we're going to talk about it. I mean, we were up early and we kind of sold off, especially on the Dow, but we still finished with a mixed day. We're going to get into that in just a bit. Let me go through the agenda with you today. Things we're going to talk about. We're going to start off with that daily market recap, get into talking technically, chart breakouts, earnings spotlight. We'll wrap up with the 3 you must see. Before we get into that, though, let me take you over to earningsbeats.com. We have changed our website, updated it. I think I'm pretty pleased with it, but we'd love to have any feedback that you might have. You can email us at support@earningsbeats.com. We'd love to hear from you. If you scroll down on this page, you'll see that we still have an area where you can subscribe to our Earnings Beats Digest. So if you just simply type in your name, email address, hit that subscribe button, we'll make sure we get you set up. Mondays, Wednesdays, and Fridays is when I publish. Normally try to get it out by 8 or 8:30 Eastern, so a good solid hour at least before the market opens. There's no credit card required. It's completely free. You can unsubscribe at any time, so we'd love to have you. So just go to earningsbeats.com, and when you get there, just scroll down, and you'll see an area where you can fill that out. Be great to have you. All right, let's move on to talking technically. So what happened, daily market recap. We'll get into the daily market recap first, then talking technically. But let's go ahead and look at the Dow Jones here first. You can see we broke out on Friday, closing at an all-time high. Well, we gave back those gains on Monday, lost 107 points, about 0.3%. Don't think there was any damage at all technically on the chart, but we did lose a little bit of ground on the Dow nonetheless. S&P 500 down 4 points, or just under 0.1%. But the NASDAQ finished higher, so that was where we got that mixed action. Saw some pretty good action on the NASDAQ, gaining almost 24.5 points, or a little less than 0.2%. Mid caps and small caps both lower on the session. Mid caps not too far from the break-even point, down just a little bit more than 0.25%. Small caps, however, down almost 0.9%, failing to get through that 50-day moving average, rolling back over. But we do have a 20-day EMA that is now climbing. So it'll be interesting to see whether or not small caps, if we test that 20-day on Tuesday, let's see if we can hold it on tomorrow's close. As far as sectors go, healthcare and consumer staples were the two best performers, up a little bit more than 1/3%. Financials up about 1/4%. Financials tacking on a little bit of additional gains after a really strong end of last week, where we saw the treasury yields moving higher. Energy, on the other hand, crude oil prices have been getting hit pretty hard of late, and energy rolled back over once again as we tried to get through that declining 20-day EMA. Till we can get through that, I think the path of least resistance, if you will, is to the downside. The PPO still continuing to strengthen, though. So if we do go down and challenge this recent low, or even break below it, challenging that April low down close to $46, there's a good chance we'll have a positive divergence in play here on the XLE. So even if we don't go up through the 20-day, another possible entry, a pretty solid reward to risk entry, would be down near 46, especially if we were to see an intraday move below 46 and close back above it. That would be a false breakdown, and that with a positive divergence right here in play, that could set up a little bit better move to the upside in energy. The worst performer on the S&P 500 on Monday was Air Products, APD. You can see huge move to the downside. This has been an underperformer for a while, and we found out why. They missed on their earnings. They came in shy of expectations, and as a result, APD, you can see, down more than 5% on Monday. All right, let's move on to the 10-year Treasury yield. You can see now for the fourth straight day, we have rallied in yields, meaning that we've seen a sell-off in treasuries. So the TNX moving back up, second straight day above the 20-day moving average. We have not seen that. 2 consecutive closes above the 20-day. We have not seen that since all the way back here, probably in mid-May. Be interesting to see whether or not we can continue. But while we are moving higher, check out the financials versus the S&P 500, really strengthening here. So this is a good thing for the financials. If the yield continues moving higher, which I think it will, that should bode well in the near term for many of the financial stocks. All right, one last thing. On Monday, as far as on Tuesday, as far as economic news goes, we will have the Q2 productivity report out. Q1 was 5.4%. We're expecting that to drop back to about 3.5%. So look for that in the morning. Wednesday, July CPI and core CPI will be out. Thursday, July PPI and core PPI will be out. If you recall, the June numbers came in much hotter than expected. July, we're expecting things to cool back down a little bit. July CPI, expect the headline number expect to come in with a rise of 0.5%. Core CPI rising 0.4%. And then on the PPI side, the producer price side, July headline PPI expected to rise 0.6%, while the core PPI expected to rise 0.5%. All of those numbers, by the way, much less than what we saw in June. So we are expecting things to moderate a little bit. The market has been all over the place with these inflation reports. So Wednesday and Thursday is going to be a pretty good gauge to see whether or not the market's still concerned with inflation. All right. All right, now let's move on to talking technically. So here is a 1-hour chart of the S&P 500. I actually put this chart in my daily market report that I sent out to members on Monday afternoon. One thing to look at is you see the higher prices here on the S&P 500 from July 26th to July 29th. That was accompanied by lower PPO. So you had a negative divergence in play. Now, this is only an hourly chart, so I wouldn't be overly concerned. I wouldn't be expecting a bear market because you have a negative divergence on an hourly chart. I mean, that would be silly. But it does signal to us that at least in the short term, the market seemed to be losing some of its momentum. And sure enough, after we saw that, we did see the next 2 or 3 days, a little bit of movement to the downside. We actually saw the PPO, hourly PPO, move back below centerline support. It tested the centerline, went a little bit below, but it never lost the price support area. So that price support from July 27th, we held it when we came down on August 3rd. So that was good news. So we had equal highs. We had really, and I had annotated this on the chart as well that I put in a daily market report for our members. But you can kind of see here a neckline. Here's a left shoulder. Here's the head. And then here's the right shoulder. So it looks like a topping pattern. I would caution everyone from looking too deeply into bearish patterns that develop during secular bull markets, because a lot of times these bearish patterns will not execute. And so if you look at a pattern like this and you start thinking bearish thoughts and then you get out, look at what happens. The S&P 500 breaks out again. So if you get out thinking, hey, we're going to break down, and then you break out, what do? Do you get back in at the higher level? Because this pattern is no longer in play. We now have a higher high. Once that head's eclipsed, that pattern's negated. So now we've got the PPO rising on an hourly basis. We're holding the rising 20-hour EMA, and it looks like the index wants to go higher. So I think we got to be really careful when you look at charts and you see bearish patterns. In a secular bull market, many of those will not execute. All right, that's about all I wanted to do there. So let's go ahead and wrap that up. And now let's move on to chart breakouts. So I put together all of the 52-week highs on both the New York Stock Exchange and on the NASDAQ. to give us a pretty good sense. And there were, I don't know if I pull this up and edit the chart, there are 113 of them on here. So here's what I would do when I, just to get a quick and dirty analysis of these stocks that are breaking out. What I want to see is exactly what I see here on the Agilent chart. AD line moving up, setting a new high. Prices, obviously, these are stocks on the 52-week high list. So obviously they're setting new 52-week highs. So they're moving higher. When you look at the relative strength, what I would like to see is probably within the last month or two, new relative highs versus their peers. We want leading stocks, and preferably in leading industry groups. You can see medical equipment actually versus the S&P 500 has moved up to about a 5 or 6 month relative high. So we are starting to see much more strength in the group. And then Agilent is one of the leading stocks in this particular space. So everything really looking good here, other than the fact the stock's just overbought. I don't need to see the RSI to tell you that this stock is overbought. I mean, we were at 127 probably about 2.5 months ago. We just hit 156. So we're probably talking close to a 25% gain in less than 3 months. So the stock's going to be overbought to some degree. But as you go through these, that's what I would look for. I would look for that AD line going up. This is Albertsons. See this one nice? There's your breakout. Come down here, you look for relative strength. This is in the food area, ACI, DJUSFD. I think this is the food products, or food retailers. That's right, FP is food products. So food retailers. And ACI continuing to perform well, not just on an absolute basis, but also on a relative basis. And it appears to be accumulated with that AD line rising. Those are the things that I would continue to look for. So another one, how about Adobe? AD line rising, price action rising. Check out the software group, relative strength. Adobe just hit a 9-month relative high just a few weeks ago. And software started to strengthen again, has been strengthening for the last few months versus the S&P. So you got a good group and you got a leading stock. This is what we want to see. Automatic data processing, ADP, AD line, price action, relative. Well, there's software. Relative strength, not quite so good on ADP, but this has been a really strong group. So you can see relative to the S&P 500, ADP has been strong. It's just that it's in a really strong group. So it's a good one. It's just probably not one of the best in software. Then you get Adtran, AD line going up, price action going up. And then you look relative to the telecom equipment, and it's at a 52-week high. Albemarle, I think you're starting to get the picture here. There's your price, there's your AD line. There's your price action, good volume coming in. And relative to its commodity peers, rising very strongly. Leading stock. Alnilam, probably just butchered that, pharmaceuticals. AD line strengthening, price action, volume picking up. Look at the relative strength versus biotech's 52-week high. And then you see a stock like Altair Engineering, ALTR. Now this one bothers me a little bit for a couple reasons. Number one, look at the AD line. Much different than all the ones we've just looked at. It's been consolidating, so it's not, I would say as long as we continue to hold about $62, we're fine on the chart in terms of price action. But AD line's not cooperating. And you can see just a few weeks ago, we set about a 7 or 8 month relative low to software. So we're starting to weaken. It's a strong group, so that's what's holding us up here. But I would say that there are a lot of other software stocks that we should be interested in over a stock like ALTR. So I just think you've got to be a little careful and make sure that the stock either get that breakout with increasing volume, you see that AD line start to strengthen something. Otherwise, I'd be a little bit more careful here. Let's see what other stocks we have. I'm going to pull up just a couple of them randomly. I've not gone through to look at all these charts. AXNX, this is Axonics modulation. Wanted to pull this one. It's in the medical supplies area. You can see medical supplies just broke out recently. This stock close to a 52-week high versus its peers. Notice it's coming off this 50-day test, literally 62.5 just a couple of days ago, and then quickly back up to the 70 level. This is a stock that's been trending up nicely for the past few months. The relative strength, as I mentioned, strong, and medical supplies just recently broken out. AD line up near a high. AXNX looks pretty good. CRTX, I'm going to bring this one up because it's on our short squeeze list. And this is one that I've been talking about in our short squeeze when we do a short report every month. CRTX is one of those stocks that has been, it's one of the few on our strong short squeeze chart list. It's one of the few stocks that actually has been gaining ground. Most short squeeze stocks or stocks on our short squeeze chart list that are heavily shorted are in downtrends. This one is not. And you can see what happens when it starts to break out and everybody on the short side is underwater. They were panicking to get out of CRTX, to cover and return their borrowed shares. Stock was up 47% in one day. This is why we do what we do on the short squeeze chart list, because you don't want to just jump in blindly to any stock that's heavily shorted. Most of them are heavily shorted for a reason. But when you see the short squeeze breakout, it's generally because you're getting the high volume, you're getting movement to new highs, which means anybody who has been shorting the stock is under pressure. When you buy a stock, the most you can lose is what you invested. When you short a stock, then you've got, you're borrowing shares from your broker and you're selling borrowed shares. You have to buy those shares back at some point and return them to your broker. Now, your broker takes care of all the accounting. You don't physically have to return them. But when you short a stock, you have to buy it back. And the beauty of a short squeeze is when everyone's underwater that's been shorting the stock and it starts taking off, the short squeeze adds more and more fuel to the fire. It's literally like being out at a fire and taking kerosene and just pouring it on it. And so the buyers just trip over themselves trying to get out of the stock. And there's your short squeeze. And that's what happens. Now, I believe this particular stock, and we'll end with that one on this particular segment. But that stock, if I go into the short squeeze chart list that I do, it is at 20%. The short percentage afloat, 20%. And there you have it. So this is absolutely one of those stocks. And you can see even before today, if you go back toward the end of last week, this stock ran from 55 to 70 last week before having this huge push to the upside. Now, I'm going to show you one other thing here on this short squeeze, because you can tell when the short squeeze stocks start to take off. Look at how many stocks did well today, pulling up the percentages. Of course, CRTX was the big one, up 47%. VXRT, 12%. KNDI, 11%. CLOV, 9%. These are the percentage short percentage afloat that's out there. Blink had a pretty good day today. This is one that we've been watching. It's trying to get back through the 50-day moving average. Let's see, what else did we have? Riot. This is one that I put in our short report and wanted to watch, get through 35. We did that at the end of last week. Look at that volume pickup. Now we went up to 40. That's going to be an area where we need to get through. But if it goes through 40, this is a stock that absolutely could melt up, because again, anyone that's been shorting the stock for the last 3 months is going to be underwater if the stock goes over 40. So we got up to 39.95. Already, I think there's some pressure on shorts, but I think that will intensify if we get through the 40 area. A stock that I've been trading is RVP, another one that's been moving higher. You can see the volume picking up, but we haven't seen anything like what we saw on the CRTX. We haven't seen that huge spike and that massive volume, but it could happen. And as the price moves up, you can see right now we're higher than we've been at any point over the last 4 months. So anyone that's been shorting this stock is underwater, may have to think about covering soon. So, but most of the stocks, as you look at them, they're not very good stocks. FUV is not bad. This one's trying to get a breakout. But if you go down the list, here's Workhorse, nice reversal on this one, but it's been trending lower. Next up, Blink, yeah, had a pretty decent day, but for the most part, still below its 50-day, it's been moving lower. GoGo, couple of good days recently, but prior to that, moving lower. SPRT starting to strengthen. This one looks pretty good. Root, been weakening, but today strengthened. Ride, look at that move to the downside, pretty weak. So my point here is that as you look at these stocks, most of them are shorted for a reason and have been downtrending for a while. So it's not like these short squeeze stocks you want to just jump in. You want to make sure that it's a stock that's rising. You want to see that volume pick up. And then literally it's like an exhilarating ride, but it is still very risky, very aggressive. And so only those who are interested in taking higher risks should be looking at these stocks. All right, anyhow, that is the end of the chart breakouts. Through a little short squeeze action in there for you as well. Let's look at the earnings spotlight. And first up, let's take a look at NTR. So NTR missed on their earnings, 208 versus 209, but the stock was up 5% after hours. So it looks like maybe it'll be up around 63 and a half area. We'll see whether or not we can break back up above 65. That's what you want to see with the stock. But wanted to point that one out. One of the big gainers, maybe the biggest gainer, certainly one of the biggest gainers after hours on Monday was Lufax Holding, LU. Now, the stock is showing that it's up 11% after hours. They did beat bottom, by the way, 29 cents versus 24 cents. That's their earnings per share. So they did come in with a better bottom line than expected. But look at the AD line. Now, what that AD line tells me is that there probably aren't a whole lot of hollow candlesticks. We had some back in here, and you can see the AD line was rising. But outside of that, for the most part, we've been going lower. And if you look here, over the past couple of months, there have been very few hollow candles. So we're gapping up 10%, 11%. If we do that tomorrow, I'm going to be a little nervous, to be honest, whether or not we can sustain this move through the 20-day moving average. We'll see. But when I see an AD line that's weak and I get a gap up on anything, if I own it, I would take my money, because that weak AD line is telling you a lot of times the stock will weaken off of a gap up. AMC reported after the bell. Interesting. They did beat. Their loss was 71 cents, but Wall Street was expecting a loss of 91 cents. Stock up 5 1/3% after hours. So it was up about $1.70. So we're going to be looking somewhere around 35.50 tomorrow. 20-day moving average is 37.31. That may come into play tomorrow. We'll have to watch. Let's see, another one. How about Halo? Halo up 10% after hours. Halo is expected to earn 43 cents. They came in 66 cents. Been sideways consolidating. Pretty good support down around 39 level. And we're at 40 and change. Biotech starting to strengthen with this beat. Stock up 10% after hours. Looks like about $4 or so. We're going to probably be up challenge in the 45 level at the open tomorrow. All right. How about DDD? Stock up 12.6% after hours. Earnings per share came in 12 cents. They were only expecting 5 cents. So big move here. 10%, looking at it probably about the 31 and a quarter area. After hours tonight, we'll see where we open on Tuesday, but it looks like we'll get off to a decent start there. PRPL is another one that was up almost 13% after hours, and they missed on their bottom line. So this could just be a temporary push to the upside. They were expected to earn 13 cents. They only earned 5 cents, but stock was up 13% after hours. So we'll see what happens here, but that would be somewhere in the neighborhood of probably $3. We're going to probably be up close to 28 bucks on the open based on where it was trading after hours. Now, if there's one positive here with this stock, as it's been moving lower and went all the way down to challenge this low and this low near the 24 level, as it did that, AD line was pretty much just flat across here. So maybe we get the gap up and we continue to rise. This one wouldn't surprise me, just the way that AD line has been shaping up. And then the last one I'll point out, this was one that was very weak after hours. FLGT, Fulgent Genetics, down almost 15% after hours. Expected to lose $2.57. They lost $2.55, but the stock's been moving up into earnings. AD line's been moving up. And so this 15% drop to the downside, we're probably looking at maybe mid 90s, 93, 95, something like that. And the 20-day is at 95.60. We may see a gap down and then recovery on this stock tomorrow. I like all of these hollow candles. I like this AD line. The fact that we're gapping down may be an opportunity for more accumulation by Wall Street, something to watch for. All right, let's move on to the 3 you must see, and then we're going to wrap this up. First, I wanted to pull up ALRM. So this is alarm.com. We did gap up. I believe that was with earnings on Friday. Sold off, black filled candle. So it means you open up above the close. You close below the open. So it was a sell-off during the day. And then we had another filled candle today. So after gapping up, getting in near 95 from last Thursday's close at 85, we've worked our way all the way back down to 86.62. Looks like we're about to challenge both gap support and the rising 20-day. That's where I'd like to see this stock turn back to the upside. All right, and it is in the software space, which has been pretty strong. So I would hope that we would be able to hold that gap support near 85. Next up, Trade Desk, TTD. I like the way this one's shaping up. Big move up, pulls back, another breakout. Look at all these hollow candles, that AD line trying to break back out again near 52-week high. This has been pretty strong coming off of this relative weakness here. We just recently moved up to about a 4.5 month relative high versus software, which has been a good group. So this is a stock that's really starting to strengthen. I like this breakout right here above 80 coming across. And then once we broke it, we came back down, went below 80 intraday and held it. I think that's a good sign. And then the last one I wanted to mention is Levi, L-E-V-I. AD line was at a high just a few weeks ago. Now it has fallen apart a little bit, which means a lot of filled candles. Volumes picked up on some of that. Clothing and accessories have broken out, and Levi, relative to its peers, is now down at about a 6-month relative low. So this is a stock I actually liked in this space, but now all of a sudden not performing well. Be careful. All right, that's it for me. I want to thank everybody for tuning in. Make sure you join me over at earningsbeats.com for the next Trading Places Live, which will be on Wednesday at 9 a.m. Eastern. Have a great day, everybody. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.